All right. Hey guys, Brad here with another Elliott wave centered video. And today we're going to be looking at gold. Now I know everybody's excited. Gold has been so bullish. Is it possible that we are reaching a lasting top, or at least a more lasting top than what we've seen recently, which are shallow pullbacks and constant extensions to the upside? I want to clean up my long-term gold chart, and I figured why not make a video of me cleaning up my chart so we can try to discern where this top is heading. Where might gold top out? All right, let's dive into the chart. We're going to look at the daily chart first. I'm really zoomed out here. This is the continuous gold contract because really what I'm looking at here, this is the 2015 low in the at the right at the end of the year. That marked a low. So the way we're Elliott wave guys are viewing this is wave 3, this is wave 4 down into the 2015 low, and then we have a new impulse starting with this being 1, 2, 3. Wave 4 bottoming back in October of 2022. So just, 2.5 years ago. Wave 4. And then now we are in wave 5 of a very large structure. So for you Elliott wave guys to understand a little bit about degrees, this is either wave 5 completing an entire 5-wave structure, which means the pullback is going to be brutal and take years. Or this is the top of we are still 1 degree behind, and this is actually the top of a larger degree, wave 3, in which case we'll get a wave 4, and then one more shove to incredibly, as incredible as it may sound, another extreme high. So I am more of a day trade scalper though, so I'm not fully focused on that, but I'm using this larger time frame for clues. And the basic point I am making is that if this is really the bottom of wave 4 in October of 2022, we are completing 5 up now for wave 5 of a larger structure. So no matter what, the pullback would be tradable to the short side. Yeah, but before we even think about shorts, got to figure out where's the top. Where might this thing top out? So for that, I'm going to jump down. I'm going to get off of the continuous contract. This is the continuous back adjusted gold futures contract. I'm going to go back to the June 8-hour contract, which of course doesn't give you as much history. So I'm going to pick it up where that this is a 3-4 here. We are way ahead off of the 2022 low that I just showed you. We already had the 1, 2. This was wave 3. This is wave 4. So basically, this is wave 5 of that structure off of the 2022 low that I just showed you on the daily continuous chart. So now we're looking at the June futures contract using the COMEX data feed. Okay, and what I want to do is figure out where might this thing top. Let's get some targets. So one of the obvious things is 1, 2 already in place, wave 3, topping out right in a ratio box of this 5-wave move. And as you know, because if you're an Elliott wave guy, you know that these waves internally must be, and an impulse must be also composed of 5 waves. So wave 3 could be expected to be composed of 5 waves. So I have to change the degree, make it 1 lesser degree. And you see the way Elliott wave works is it understands, the methodology understands the fractal nature of price, which just means self-similar at scale. Fractal has a few different definitions. I like the simple definition of a fractal being self-similar at scale. So on the internal structure, I like to change the color just to keep it clear in my mind. So inside of this wave 3 up to here, we have a 5-wave structure. And, inside of here's another 1, 2, 3, 4, 5. I'm just going to label that. This is getting a little academic for you guys. But hey, why not? This is at least highlighting the fractal nature of markets. And so again, I have to adjust the degree, and just to try to keep my chart a little clean, I'll just make those fibs, those labels yellow. All right. And you'll notice too, as you venture into Elliott wave more and more, that the larger structures tend to be more reliable than the smaller structures. So sometimes these internal structures, proportions may be off, maybe it doesn't look right. Maybe I've got my, could this be the 1-2 and then move this 1-2 lower? Could I spend time in there? Yeah, I could, and I did when I was actually trading that. But for the purposes of this video, all I'm really trying to do is figure out where's this top. Where might I expect gold to finally top out? But I'm just filling in a little detail here for you, just as a teaching moment to illustrate the fractal nature of markets. So, all right, so one, and I can see that, yeah, okay. So we've already got this 3 top, this 4 pullback. So one of the first things I like to do is to use a ratio box. Now you may notice, if you've been following me, you'll see these ratio boxes on my chart, like this one here. And this ratio box right here relates to this internal structure inside of this purple wave 5, which is composed of 5 waves. And this ratio box is where I was looking for a 5th wave to terminate, which you can see that it did. So for this much larger structure, I'm talking about the one in white, 1, 2, 3, 4, 5. I'm going to use the same idea. I'm going to put a ratio box on here. I'm going to use the magnet. So the first click is going to go at the low, the swing low, which I'm considering the bottom of wave 4. The second click is going to go at the top of the wave 3. The third and final click is going to go at the bottom of this wave 4. And I'm going to read that number. What is that? 2974. I'm going to drag it over. 2974. All right, there's 2975. I'm going to go ahead and put it right on 2974. And I'm going to use my template for the 3 versus 5 ratio box. So basically, what you're looking at now is a very rough target based on an Elliott wave ratio. And that ratio is just an idea that the wave 5 in a 5-wave structure typically terminates within this ratio. And what is this ratio? Well, this is the 618-784. If price makes it up further into this, actually, I just noticed it's already touching that box there. But I think this is a wave 4, so I think it's going to come up higher into this box. Okay, and what this ratio represents is the idea that the 5th wave could typically target somewhere inside of this ratio box, which means that the total length of wave 5 is very often 618 to 764, the entire length of the swing low to the top of wave 3. So in other words, I know this is complicated. Some of you are totally with me and getting this. Some of you are not. Let me explain it. I'll try to explain it one more time a little more clearly. So the total length of this swing low to the top of wave 3, let's call that distance, that price difference between this swing low and the top of this wave 3. Let's call that 100 units, okay? Or 100%. Let's call that 100%. Once wave 4 bottoms, you can measure that 100%, okay, and project from the wave 4 low 61.8 to 76.4 the length of wave 3. So in other words, we're not taking the 100% of wave 3 and projecting it from the bottom of the wave 4. We're taking 61.8 to 76.4% the length of wave 3 and projecting that from the bottom of wave 4. Hopefully I didn't just kick a dead horse. Hopefully you're with me, but that is what this ratio box is. And we're using it on the entire structure. So now what I want to do, that we have a general framework on an 8-hour current front month futures contract COMEX data feed. I want to drill down now. I mean, I could actually stay on the 8-hour chart, but I prefer to be on the 4-hour chart just so I can get a little more detail of the wave structure. And what I mean by that is just looking at this, right? What we're looking for is another 5-wave structure. Because why? Well, because Elliott wave theory postulates that the 5th wave is going to be also composed of 5 waves. So to me, the most obvious thing, there's 2 things. Let's do the same exercise that I just did with this ratio box, right? From the 8-hour chart on the entire structure, right? That's what this ratio box is from. Let's do the same measurement, but this time on this degree structure here, because there's certainly a 1 through 3 and a potential wave 4 already in place. So let's do the measurement and see if this wave 5 ratio terminates inside of this larger degree ratio box. So we'll put the first click at the bottom of the swing low for wave 4. You see this is the same exact, I'm using the same words I just used on the larger structure. We put the first click at the bottom of wave 4. It's just that now we're at a different degree of the wave 4, right? We're a much smaller degree of the wave 4, looking for this degree, wave 5. Okay, so we got the first click in place, and I'm just gonna, let's just say that this was the top of wave 3, and that this was the bottom of wave 4. So if that's the case, if that is the bottom of that degree wave 4, what is that? 3208.70. I'm going to drag it over 3208.70, and I'm going to actually put it exactly on that number to the penny. Okay, the other idea is that this is wave 3 and this is wave 4. All right, so I'm going to make the same measurement again in terms of where the first click goes, but instead of making this the wave 3 and this the wave 4 bottom, I'm going to put the fib tool as if this were wave 3 and this were wave 4. And if that's the case, this thing is going a lot higher. So I don't like that as much because I trust the larger scale degree, the higher degree box better. So, and this would be considered confluence, meaning the ratio as if this is 3-4 and this is wave 5, I like this box better than this box because this is inside of the larger degree ratio. So just for the moment, I'm going to leave that there. What I want to do now is I want to examine a little more closely the relationships internally of this wave right here and try to come up with some other fibs that are not fib ratios, but rather fib projections, and see if I can find some fibs either in this area right up here or in this area right up here. And I'll try to glean from the fibs what is most likely to be an area we can look for a top. All right, so this is the 4-hour chart. Let me see. Do I already have? What is? Okay, so I actually kind of already have a 1-hour. Oh, sorry, that's a 3-minute chart. Yeah, let's just keep working on the same longer time frame chart since I already have the measurements on there. And by the way, just over here, since we're on this topic and I already showed you my 1-hour chart, there was always a chance that this is the high. And if that had been the high, then if you look at the 1-hour chart, then this right here, this wave 3 low, the wave 4 bounce would have been terminated somewhere in this region. And then it would have come to, see these arrows I got here, and even this arrow. So this coming all the way back up into here told me is much less likely that much less likely that we're going to go down and complete 5 waves down. Because if we had completed 5 waves down from here, I would have considered this as being the top. But because of the internal structure on the smaller degree, did not complete 5 waves down. And it actually kind of looks like a corrective wave, meaning A, B, C. I mean, there's always listen, anything can happen, but I think the odds are gold needs to go higher. And that's what I'm going to stick with. So now let's move down from the 4-hour chart. I want to get a little bit more clarity of the price. Okay, that's plenty of clarity for me to make some measurements now. So, yeah, let's. Okay, so I've already had a little bit of a measurement here. I called this a pivot. 4, 1, 2. Yeah, let's put some more extensions on. Let's just do. I've got some fibs already set up in here. So if this is out of proportion, but gold is doing this, it's extending to the upside. So if this is the 1, 2, then the wave 3 really extended all the way up here. And then this wave 4 is also very shallow. And then we're just blasting off and making another high. 1, 2, 3. Yeah, so 1, 2, 3, 4. And then this is another 5-wave move, which clearly looks like a 1, 2, 3, 4. Right, 1, 2, 3, 4, 5. So guess what? Now we're going to take another ratio measurement for this much smaller degree. Okay, so if this is 1, 2, 3, 4, and we're working on wave 5, which I think should terminate inside of this zone. Sometimes I change the colors just so we know that the lighter color is the lower degree. So in this case, I'm just going to use purple. Okay, so I'm going to take another measurement of this 5-wave move, which has only completed 3 so far. So I'm going to put the first click at the bottom of the, guess what, wave 4. This is the third time in this video I'm showing you measuring from wave 4 of a different degree. Each time I'm going smaller, right? So first click goes at the swing low of the bottom of wave 4. In this case, it's wave 4, but it's really wave 0. And this is 1, 2, 3. The second click goes at the top of wave 3. The third and final click goes at the bottom of what we think might be wave 4. And that comes in at 32.9640. So let me just drag that over. 32.9640. And we will change the color on that just so it looks a little different, indicating it is of a different degree. Okay. All right. All right. So basically, this thing is wildly extended no matter what kind of fibs you want to put on it. It is wildly extended. But what's cool is even though it extends, it still retains some proportionality to itself as a 5-wave structure, including the internal structure. So the idea here, the way I would think of this is just if you need a target range and you're still long, somewhere inside of this, call it a fib cluster if you want, because you've got 3 ratio zones, right? You've got the big one in green, you've got the next degree down in this purple, and then you've got the third and final degree down in this lower color, other additional purple color. And then I'm highlighting it with this white oval just to highlight the idea that somewhere in here would be a reasonable thing to look for termination. And so if this is really wave 3 and this is wave 4 and this is 1, 2, 3, 4, 5, then it's going to terminate somewhere up in here. And just to get a little crazier with it, I'm going to measure. Now I'm going to drop down to the 1-hour chart and I'm going to just try to get some fib levels on this smaller degree potential 5-wave structure. So it looks like it looks kind of like Yeah, it's debatable whether this is the low here or this is the low here. I'm not going to get into an academic thing. So I'm just going to go with the lower low, which is this one right here. First click, 3205. If this is the top of wave one, if that's the top of wave one, that's the second click. And if this is the bottom of wave two, that's going to be the third and final click at 3208.70. 3208.70. And then I'm going to go here and put on some fibs using my fib template. And then I'm going to drag over 3208.70 because I want to see where do these fibs strike inside of our ratio boxes up there. All right. All right. So the first thing I can say is all of these little internal structures are extending to the upside. All of them. And that's not unusual in a screaming bull market. So there's some confluence with that fib. Did you see that? See that white fib that's blinking on and off? It is almost to the penny at the 764 of that ratio. And then I also notice the 3236 fib, which I'm about to blink on and off. Can you see that other one blinking on and off? That is absolutely lined up with the 618. So that's just call that Fibonacci confluence. And let me just see what would happen if it really extended. Okay, look at that. The 400 fib is coming in exactly at the 764 of the other ratio box, right? Right? Because you remember that 618 and 764 is the ratio box. So all I'm showing you is I just put on 3 white fibs, and all 3 of those white fibs are lining up with almost to the penny with a Fibonacci ratio level. That's called confluence. So I like confluence. Now I'm just going to play around. I'm just curious. Doesn't look like, well, the 414. I mean, I don't often use the 414, but all right, I'm gonna leave it at that basically, and I'm gonna try to use a different color for these fibs. I'll just use green for the lower degree that we just did. So basically, there you have it. So now let's just give some parameters for the gold trade. If this is going to happen, you're definitely not going to make a new low, right? There's just no way. No new lows. Okay? Cannot make a new low. And we want to see this come up. Now this is where we get into the micro. So now I'm going to hop over. Now I probably shouldn't burn your time on this, but I can't help it. So we already know that this count is wrong and that the ABC count, I believe, is correct. And that's the alternative count that I had on my chart. And that's why I sometimes have 2 counts on my chart, because I'm not sure which one is which. But what we do know is what our parameters are. And this was a parameter too, this zone right here. And price got above it. So, so you can tell I had already started measuring for this as if it were an impulse. And price came up, got rejected at the 1382, and is making its way higher. Well, given, let's refer to, let's just say this target right here, 34.20, 34.25. So all I'm doing is just putting a couple of fibs on this 1 hour chart. All right, so Just putting some fibs as if this is 1, 2. See, that looks like, this looks like 3 up to there. So 5 up, this could be 5 up to there. I mean, it's possible that could be the 1, 2. Just to right here. And if that's the case, then that one, where would that 200 fib be? Which is kind of a standard thing. What is that? 34. And then we put the, yep. 34.13, 34.19. 34.19 to 34.24. So now I can just keep an eye on this 1 hour chart with the idea that if this is going to really fill out this wave 5, the parameter, I'm giving you, let me give you some parameters here. Okay, 33.23.70. Let me drag this on over. 33.23.70. And because I'm imagining that I'll be working on this chart for the week, what I'm going to do is extend the fib levels automatically over to the right, so they always are staying over there. So no matter where I move the chart and make other measurements, these are always going to stay over there. And I also want to make them white, because when I'm looking for a standard impulse, I'm always using white. These white fibs were for the downside structure that I believe has invalidated. So now here are your parameters for the week in gold if you're looking for a 5th wave higher, somewhere up to, just call it 3,420, somewhere up in there. All right, so the most obvious line in the sand is this cannot come down and make a new low, right? That should be obvious, right? I think unless, well, you can see I had this level on here in these arrows, right, which at least for the moment appears to have played out because it got rejected in this zone and it caught support in this zone. Yeah, this could be a wave too. It's hard to dial in this really low time frame stuff, but let's just stick to parameters. So for right now, I think the next best low that you don't want to see get broken is this one right here at 33.23.70. You know, who knows? Maybe it's going to come back. Just simple price action. Maybe it's going to come back and back test this zone. But really what you want to see now is you want to see price stay above. Let me make these incrementally bigger. Smaller, sorry. So this is the most important one down here for, you know, for a trader, day trader, scalper. And this is the second most important one. And then really the next resistance zone, since in my view, since we are above 33.23 and we just broke through this resistance as well, the next level of resistance I think to watch for would be up into the 100 fib. Okay, and if it makes it through the 100 fib, you want to see it. You want to see if it can make it to the 1.618 fib later in the early part of the week. So that's going to be the next level. And then, you know, we're going to be taking measurements inside the Professor Trades Club. We're going to be taking these measurements during the day and updating our charts so that we can dial in what I think is going to be an epic short opportunity. Now, I'm not going to do anything unless there's a setup. I'm not going to do anything unless I have fibs to support the idea, and then some price action and a few other technical things. But for right now, I really like actually this area, just not even thinking about it, anything other than the fibs that I'm looking at right now. I like this area as a target box. And one of the things we're going to do is we're going to, as this unfolds, we're going to measure. Okay, so if I had to just kind of expound on this arrow idea, I would say this needs to get to there. Needs to get up to the 100. And I kind of like that there's a top right there. That could be a little resistance too, right in this area. But ultimately, if it gets above that high, man, that would be all glorious. Come up here and get to the 1618 and then come back and back test this zone. If I really want to get a little, try to be as exacting as I can on these lower time frames, which sometimes is a fool's errand, just because it's less consistent. But I don't know. Oops, got the magnet on. I just like filling in even the lower time frame stuff. I try to fill it in just like as if I'm doing a 4-hour chart or a daily chart. It just happens to be a 3-minute chart. So anyway, that's the deal. So this is what I'm looking at. And it's really, the parameters are really clear, right? You got 2 parameters to the downside that you do not want to see. But those are your clues. Those are your clues. And you really want to see this. This really could be the one too. Yep. And if so, it projects very nicely into very typical fibs, right up to 34.28, 34.19, which happens to land us right into this area of confluence on the larger time frame chart. Cool. All right, guys. Hey, thanks for watching. If you got value from this video, do me a favor, smash the like button, would you? That kind of thing really helps me a lot as I try to grow the channel and teach Elliott Wave to more and more people. So thanks again for watching. Appreciate you guys, and I'll see you inside of the Professor Trades Club. The link to his room is in the description of this video. All right. Thanks again. Bye-bye.